Scott Bessent just said something that suggests the gold revaluation theory is coming back. While you listen to this clip, ask yourself where those almost $1 trillion of profits from gold being revalued are going to go. Are they laying the foundation to create budget neutral ways to add to the strategic Bitcoin reserve? I'm not saying this. Scott Bessent is saying this. So let's watch the clip.
What are we looking at here? These look exquisite.
Yep, so these are the displays of our currency over the years. Some of it, like we used to have silver certificates. We used to be backed by silver, sometimes gold. And then in the 70s, we just went to what was called fiat currency, where you didn't have to keep gold or silver in the vault. If any of these are still outstanding, though, the silver or gold for them is the at Fort Knox, waiting for them to be claimed if so needed.
Have you visited Fort Knox?
I haven't. People on my staff has. We're going to the Treasurer's office. The Treasurer has been to Fort Knox. I am happy to say all gold is present and accounted for. The U.S. has the largest pile of gold in the world, over $1 trillion at current market value.
And we're getting more gold from Venezuela.
All right, so first off, we got to point out the elephant in the room. It was definitely a trust me, bro moment. Scott Bessent's like, hey, look, I haven't even seen that, but our treasurer has, and I can tell you for fact that it's there. And all of us are sitting here like, wait, weren't we supposed to get a Fort Knox audit on all the gold? But Scott Bessent says, trust me, bro. So, hey, guys. Aren't you so happy if you're an American? At least we can trust Scott Bessent and the U.S. Treasury Department to confirm that the gold is actually there. So that's, that's probably the biggest elephant for all of us Bitcoiners, because we are huge. Don't trust, verify. Obviously, this is a trust me, bro moment, but we'll throw that aside. Okay. We'll throw that aside for the, the benefit of this conversation. But what is very interesting is how he ended that clip. It's that the US, again, if we hold all the gold that we supposedly do hold, is at current gold prices about $1 trillion. So how much gold is actually supposedly, allegedly at Fort Knox? Well, I went and got the numbers for you guys here, and it is, at least from what the U.S. Mint is saying, it is about, oops, wrong one. You can see here, 147,341 858.382 troy ounces of gold. So we'll round it to about 147,000 ounces of gold. Now, if you know anything about how the U.S. holds that gold, it is currently priced at about $42 per ounce, or $42.22. Now, let me check what the current gold price is, because I have the old gold prices on this picture here. Current gold prices is about $4,038. So it'll be north of $1 trillion if that gold does get reevaluated to current market prices. Now, obviously, because of the way that the gold reserves are codified, it is currently priced at that $42 per ounce price. So this is where the big conversation is happening. Obviously, we have heard amongst Bitcoiners, in particular, Senator Lummis, and I believe it was also Nick Begich's bill, basically saying, hey, if you're looking for budget neutral ways to buy some Bitcoin, well, maybe we price the gold in the current prices, which is, a lot more than $42, currently around $4,000. And then you can take some of that profits, at least on the book, to have budget neutral ways to buy Bitcoin. Senator Lummis has actually gone even further and basically said that, how about we just sell the gold and we buy Bitcoin? If we did amplify the U.S. books here, their balance sheet to current prices, that's a lot more money that we can play with. And that would, in fact, be a budget neutral way. So Scott Bessent saying, hey, the amount of gold that we hold is roughly about $1 trillion, maybe a little more. I think from what the numbers are, depending on the current price, it's like $1.06 trillion. The current holdings allegedly at Fort Knox are about $11 billion. So, $900 billion to play on your balance sheet. Just imagine if that actually was used. Besides just what did I always say about Bitcoin? Besides it just sitting there and being hoarded and having no yield and no use case besides, storing value, what if they use some of those profits, at least on the book, so that they can buy some Bitcoin? They could do this in various ways. Obviously, one, just a simple sell the gold, buy the Bitcoin. If they did sell, who knows, $100 billion, that extra $900 billion, which would obviously deplete our gold holdings. $900 billion going into Bitcoin, again, with the multiplier effect anywhere between like 3 or 4. That would add, I don't know, $3 trillion. Let's just round it up so we could do this a little easier. Say it was $1 trillion with a 3 or 4 multiplier effect going into Bitcoin. Again, for every dollar that goes into Bitcoin, it adds about $3 or $4, depending on market dynamics to the Bitcoin market cap. So, adding a whopping, I don't know, $3 to $4 trillion to the current Bitcoin market cap, bringing it up to at minimum $4.25 trillion or even maybe $5 trillion. Instantly, basically overnight, the Bitcoin price would absolutely explode higher than it currently is. Now, obviously, I don't think that would be a good move if they just outright sold all the gold. Probably the best way for them to do this is some form of like using gold as collateral, so that they can basically revalue the gold. And then now they have more collateral there. Print some dollars out of thin air. You buy that into Bitcoin. Though in actuality, I mean, depending on who you ask, adding inflation into the system is probably not a budget neutral way, at least for us. On their balance sheet, it is a budget neutral way. But for us as individuals that have to basically eat the cost of inflation, it would definitely hurt us. But hey, at this point, what's it really matter, dude? Just pump the price of Bitcoin. Let's just get number to go up. Like, who cares, right? Who actually really cares at this point? I mean, we all should care. Let's be honest. Let's be honest. Dude, oh my God, hold on. Guys, side note, why do I keep choking on my own saliva? It's crazy. It's actually nuts. So, how much validity can we put into this idea? Well, obviously, I don't think we can say that, oh, Scott Bessent just, I don't know, it just slipped his mind and, he just said that willy-nilly. He just said that by accident that, oh, yeah, we actually hold $1 trillion of gold. I don't think you can say that that was a Freudian slip here. I think they are, in fact, laying the groundwork for the gold revaluation theory. We've been hearing this for years at this point. It was a very hot button topic a year ago, or maybe about 9 months ago. And then everything's kind of really gone to the wayside because of the Iran war. And now we're starting to hear this again, which really gets my spidey senses tingling, my tinfoil hat to come back on automatically. It's like, obviously, as I've been saying, when you hear things come out of the corporate press, everything is very calculated. Whether you think they're smart or not, whether you think the people in charge are dumb or you think they're extremely smart, you have to be pretty smart to get into these positions. Even if it's like dark triad Machiavellian traits, like you still have to be pretty smart to be able to get into these positions. You got to play the game, right? And part of that game is you don't say anything to the public by accident. And if you do say something by accident, then obviously you're not going to be in a position of power anymore. So with that in mind, why are we hearing Scott Bessent, head of the U.S. Treasury Department, essentially lay the foundation for revaluating gold? Now, who knows exactly, I'm not going to necessarily mind read. All we can see and know for a fact is he said this on the news yesterday about the gold prices being $1 trillion. That, hey, I know everything, all the ounces of gold in Fort Knox are about $42, but in today's dollar terms, 4,000. It's actually what? Is that someone do the math here? No, I was going to say, is that a 4,000? It's not. It's not though. It's just interesting to hear him say this now. And why are we hearing this now? It's probably where my thinking starts to go. And you try to think through, why are we hearing this now a year later? Obviously, we haven't heard any talk about it. We don't even know what's going on with the Fort Knox gold audit. And at this point, it's almost hilarious to me that he's like, trust me, bro. I haven't seen it, but someone in my department has seen it and they accounted for it. So one, I think they're trying to make sure that the market maybe forgets about the gold audit. They're like, yeah, actually, the public's not going to see that, but you can trust us, bro. When has a government ever lied to you? We have all that gold. It's worth $1 trillion. Now, what are they going to do with the quote unquote profits, with the magic of accounting? What are they going to do with that? They could do a lot of things with it, obviously. But for us as a Bitcoin show, since that idea has been floated out a long time ago, and for a very consistent message of, hey, either sell the gold, reprice the gold, use the profits to buy more Bitcoin. Now we're getting to the point where, okay, Bitcoin's down about 50%. If this does happen or get implemented here very soon, is this all by design? I'm not trying to 5D chess this, but is it all by design? Again, you guys know one of my favorite ideas, the billionaire FUD playbook. You basically FUD Bitcoin, you crash the price, you scoop it up at a discount. I'm really not trying to do the Trump 5D chess moves. I'm really aligning more with the whole kayfabe aspect of things. It's where everything is happening in the political theater, in the public eye, to basically, continue the bread and circuses. And we see that the quote first Bitcoin president of the United States, he got elected, and now the Bitcoin price is 50% down. And now we're on the verge of, again, maybe getting the Clarity Act through. Now maybe the laws are going to be codified where everyone can get into Bitcoin. We have clear rules of the road, and now everyone will start to invest money into Bitcoin at literally the exact bottom. I'm convinced we're at the bottom here. I think we're at the bottom. We're at 65 this morning. Obviously, there's still a chance for it to go down again. But and I'll make my case for that in the numbers today. We got some interesting stuff to cover, some on-chain metrics, etc. But man, that would be just pure genius on Trump's part. And I know you guys don't like Trump. I know, even me, I've been very cynical and critical of Trump in the last year or so, this year in particular. But it would be such a genius move. And sometimes I think you just want to believe, right? You just want to believe that these people know what they're doing, even though I know in my heart of hearts that they really probably don't know what they're doing, and they're just kind of reacting to what's happening in real time. But you just want to believe. You just want to believe. It's like, wow, it would be genius. Embrace Bitcoin. Kind of facilitate a market crash through Binance, someone that you pardoned, aka CZ. And then you get the laws passed, and then you come out and you announce, oh yeah, actually we've been stacking a bunch of coin. Now we have the undisputed biggest strategic Bitcoin reserve in the world. We have the best laws in the world. Well, debatable best laws in the world. It would be a good marketing shtick going into the midterms, considering what we heard Trump say, a week or so ago, where he's like, yeah, I got into Bitcoin because it was a smart political move. Bitcoiners, and maybe you're mad about it now, but Bitcoiners and the crypto shitcoin industry were a big part of Trump getting elected. Maybe we're not a mega donor, mega lobbying group right now, but we were a significant part of the Trump reelection in 2024 when he came to the Bitcoin conference and said, hey, we are going to be the Bitcoin capital of the world. We know the Trump administration is serious about Bitcoin and maybe more directionally serious about stablecoins, obviously imposing, or maybe imposing is not the wrong word, but proliferating dollar dominance around the world through stablecoins or a digital dollar. And you see all of these moving pieces and you're like, man, maybe, just maybe, they are still thinking about doing the gold revaluation theory. But further, we know for a fact that what's going on right now globally is a restructuring or a reordering of the global monetary system. We've seen what Trump's been trying to do. If you are listening more to the Tom Luongo camp about what the real reason for the Iran war is, though, the official reasons are obviously Iran can't have nuclear powers, you know, regime change, which now is kind of, they're backpedaling on this, but now they're very staunch on the Iran can't have nuclear weapons. But throughout this whole process, what have we seen? We've seen global trade start to shift away from the Strait of Hormuz. I don't know if you guys saw, but apparently Saudi Arabia is building a east to west pipeline right now. So maybe they are essentially planning to just like, hey, IRGC, you guys can take the Strait of Hormuz. Yeah, I know 20% of oil goes through you guys, but look what's happened since you guys closed this down. Now we have oil moving in other countries. It's just interesting to see all of these pieces play out. Now, I do acknowledge the fact that this could be a reach in terms of that gold revaluation, the profits, quote, from that gold revaluation entering Bitcoin. But again, what have we been hearing about the strategic Bitcoin reserve? And we still haven't even gotten the latest update. Remember, Patrick Witt was saying a few weeks ago that we are going to get a huge strategic Bitcoin reserve announcement here very soon. It's been crickets. Nothing has come of that. At the time when this announcement of an announcement came out, I kept thinking, I'm like, man, what if they just came out and said that they had been buying buying Bitcoin this whole time? I'm like, that would be an epic move. I mean, I know you guys can call me a status, whatever you want, but the US buying Bitcoin is big news. And again, as I've been saying, Bitcoin is a narrative-driven psychological commodity, a psychological asset, where when you get big news like that, that would for sure, without a doubt, be a good catalyst to end this bear market. Maybe not even actually because of the on-chain metrics, but because of what that necessarily means for every other country. They have to get into Bitcoin. Now, that does lead into another kind of idea. If the US did do this, reevaluating their gold to current market prices, stack Bitcoin with it, what do you think other countries are going to do? You no longer just want analog gold. You need digital gold too, a part of your balance sheet. You need to have Bitcoin-friendly laws. You need to embrace Bitcoin. You need to have politicians that understand that, yeah, you can't ignore Bitcoin anymore. This is a part of the fabric of finance now. Bitcoin has entered every corner of finance. And actually, I wasn't going to play it because I kind of got bored watching it, to be honest. But there was a good clip going around of Fidelity that they just launched, I don't know, some kind of marketing. And in it, they were basically saying, like, Wall Street, traditional finance is taking notice of Bitcoin. And going further, I would also argue almost every nation state is also taking notice of Bitcoin. They can't ignore this anymore. It's not a question of if Bitcoin's going to zero. It's a question of how much Bitcoin should you have on your balance sheet, which, as we've seen, has moved from 1% to 2% to going as high as 5 to 20%, depending on your risk aversion here, how much risk you're willing to take. The game is changed. The game has fundamentally changed around Bitcoin. And yet, it's like the worst sentiment we've ever seen, which is actually kind of crazy. And especially right now on Twitter. Actually, I wasn't even going to bring it up, but I don't know if you guys noticed, but Bitcoin Twitter's back. Apparently, Nikita Beer, the head of X product, has basically realized, he went on Twitter yesterday and he's like, oopsie, guys. I just realized that in the code, everyone that you follow got pushed out of your timeline. But look, we fixed it now, and your timeline is, the people that you follow here. So it's kind of funny, Bitcoin Twitter comes back at the bottom of the bear market. So for the last, year and a half, 2 years, we've all been wondering Bitcoin Twitter's dead. Turns out we weren't all just shadow banned. We were actually, cornered into the dark corners of Twitter here by the head of Twitter, aka Nikita Beer, which I always joke. It really makes me think that Nikita Beer just kind of got burnt by shit coins and he just really hates crypto, and Bitcoin is just part of that. But anyways, the reason I bring all that up is because as we see on Twitter, all of the conversation is around BIP 110, either being pro BIP 110, anti BIP 110, whether you're core or not. You've seen the infighting, and I've just been looking at it. I'm like, man, this is such bear market stuff. But outside of our echo chamber, outside of now our renewed echo chamber, everything is definitely kind of going our way, whether you like it or not. But Bitcoin is 100% in the traditional financial system, 100% in Wall Street circles. At dinner, you have to suspect that they are conversating about Bitcoin. At the U.S. Treasury Department, you can see that they are talking about Bitcoin. Trump just came out, like I said yesterday, saying, hey, Clarity Act has to pass because of, Lindsey Graham died. Like, what? Like, what are we even talking about here? But that's besides the point. They are talking about Bitcoin. And they want Bitcoin on the balance sheet. How are they going to do it, though? Besides just asset forfeiture, they need to find ways to stack Bitcoin, quote, in budget neutral ways. And if this gold revaluation theory is back on the table, you better believe that some of that is going to find its way into Bitcoin. Will it be the whole 900 billion? I doubt it. I'm sure they'll use the majority of it for the defense spending, because remember, the defense spending went from 1 trillion to 1.5 trillion. So I'm sure maybe that's where they'll get that $500 billion for defense spending. It's by the gold revaluation theory. But then, hey, a couple of billion coming into Bitcoin, multiplier effect. That'll take us back up to the $2 trillion market cap of Bitcoin. That'll put a little juice in the engine of Bitcoin at the bottom of the bear market. Now, hypothetically here, let's just say that $500 million, $1 trillion of capital did find its way into Bitcoin right here at 60K. Man, maybe we would actually get the Omega candles. Maybe we might actually get a 2017 bull run again. Maybe the gains aren't all a thing of the past. Maybe, just maybe, we will be saved. You see much statement? Anyways, I'm getting distracted by the chat. So look, do we know this for a fact? No. But what is interesting is we are hearing the U.S. Treasury Department, when he's making his statements, revaluating the gold at $1 trillion versus $11 billion. I think that's more signal than just noise. Again, nothing happens by accident that is leaked, quote, leaked to the public. Everything is, I'm not going to say every move is calculated, but the messages that we hear coming out of the corporate press, from the politicians at the top, whether it's the Trump administration or the U.S. Treasury Department, et cetera, the DOJ, they're all said in a certain way to elicit a certain reaction from you. And that's one of the things we have to keep in mind. Now, I could be falling into it because maybe it's me getting excited, like, oh, they just said gold revaluation. Maybe they're going to buy some Bitcoin with that. I see that. I see the irony of me talking about this, but they've said it once again. And this isn't just coming from Senator Lummis. This isn't just a bill that's being proposed that had no chance of passing. This is coming from the U.S. Treasury Department, from literally the guy that destroyed the pound with George Soros, Scott Bessent. It's just interesting stuff, all right? So, hey, do we really need this for Bitcoin to go up? No, not at all. I think Bitcoin is going to go up no matter what, but we could use a little help, a little help from our frenemies. I'd be okay with that. just pump my bags, bro. At this point, pump my bags. I remember Trump said that we would get to 150K here soon, early in his presidency. We're almost 2 years in, and we're 50% off all-time high. Oh, man, good times. I'm super happy for the Bitcoin president of the U.S., the first Bitcoin president of the U.S. What a BIP 110 is what will cause the bottom. What? That it doesn't activate? Now I just turned the chat against me. Anyways, keeping it moving. I am, like I said in the numbers, I kind of changed it up. I'm gonna kind of go through some news stuff for the numbers. And then I have Peter Duan coming in today. And so we're going to be talking about treasury companies, Bitcoin treasury companies, why TradFi is getting interested to Bitcoin, et cetera, et cetera, et cetera. So shitcoin president. Yeah. So I'll be right back after this quick commercial break and we will continue the show. Here's the part that nobody says out loud. Buying Bitcoin on an exchange and leaving it there isn't buying Bitcoin. It's buying an IOU. And the last decade has been a masterclass in what happens when those exchanges don't deliver on their promises.
Bitcoin Well is a self-custody Bitcoin platform. That means that when you buy Bitcoin, it goes straight to your self-custody Bitcoin wallet. You actually own it from the very first transaction. They're available both in the United States and Canada. Pricing is transparent, straightforward, and no nonsense. And if you're buying a larger amount of Bitcoin, Bitcoin Well Infinite gives you concierge-level support through a dedicated executive Bitcoin advisor, premium help for when it actually matters.
You can also stack a little extra through the referral and wishing well rewards. A nice bonus on top of the owning your own Bitcoin thing. So go to bitcoinwell.com/simply and sign up for the Bitcoin Well portal today and buy Bitcoin you actually own. Paper burns, paper floods, paper fades. If your seed phrase is written on paper, it's not really backed up. It's waiting to disappear. Stampseed's DIY kit lets you hammer your seed words directly into commercial grade titanium. Fireproof, crush-proof, waterproof, and permanent. Once your words are in the metal, they aren't going anywhere. Use code SIMPLY at stampseed.com for 15% off anything in the store. That's stampseed.com, code SIMPLY. Alrighty, guys. Again, I do want to shout out Rumble Wallet, paid ad by the Rumble Wallet team. You guys know what we're all about here. Freedom of transactions and freedom of speech. We want you to control your money. Now, if you leave your Bitcoin on exchanges, you, in fact, do not actually own Bitcoin. And the Rumble Wallet team right now has a special for you guys. If you use the promo code SIMPLY10 just to download the wallet, try the wallet, they're giving you $10. All right, guys? $10 right now just to go try the wallet. It might become one of your favorite phone wallets, hot wallets. And like we all know, there's always been a big kind of debate on custodial versus non-custodial wallets and how easy and convenient it is to use the wallet. Well, Rumble Wallet is, of course, non-custodial. It's super easy. Download it. If you want to, connect it to your Rumble account, and you can, of course, send money to your favorite creators. We love the Rumble team. We love the Rumble platform. We love the Rumble Wallet crew over there. Again, use the promo code SIMPLY10, and they are giving you free money to download the wallet right now. All right, guys, on that note, the current Bitcoin price is $65,060. I repeat, 65060, which is a 48.4% discount from all-time high. The market cap currently at $1.3 trillion, and the block height is 958,174. I repeat, 958,174. All right, guys. So look, since we are kind of pumping right now. I mean, obviously, like what, a 1%, 2% pump, $1,000 pump, quote, pump on Bitcoin really isn't much. It is starting to make me feel pretty bullish. I'm looking at the price action right now, and I'm like, man, I might have been right about that 60K bottom. there's still a good part of me, you know, relatively speaking, that is still bracing for one more drop. And even then, I'm of the like, maybe it goes into the mid 50s, low 50s at the worst, but then it's going to quickly rebound and we'll quickly get higher. Yeah, $1,000 pump is crazy, right? We saw this. Well, I saw this. Bitwise dropped a 60-page report, and it's like literally 50 pages of charts. And the headline here from Bitcoin Mag is Bitwise sees a bottom in Bitcoin's worst vibes yet, darkest before dawn. Bitwise says Bitcoin's brutal 9-month downturn masks a stronger than ever foundation, arguing institutional adoption, corporate buying, and improving market infrastructure positions the industry for a rebound despite record ETF outflows and weak sentiment. So I'm not going to go through the whole thing, but I do like this breakdown here by Matt Hogan, the CIO of Bitwise. I'll kind of paraphrase some of this stuff because some of it does have some shitcoin stuff in here, but whatever. Anyways, we all acknowledge it's been a rough quarter for Bitcoin. You know, it's been a rough year for Bitcoin. I'll put it a little further, but there's been some bright spots, at least according to Matt Hogan. But generally speaking, it was kind of tough for a lot of you newer Bitcoiners that I've seen in the chat that started to hang out with us in 2025, maybe even got in 2026 or maybe 2024, or maybe even 2021. You know, we round trip to 2021 highs. There is something in the undercurrent that most people, I don't think, have really acknowledged here. So again, I'm not going to read this whole thing, but this part is very interesting. He's like, it goes here. Let me see the bottom here. As you flip through these pages, look at the charts carefully. Nearly all of them, prices, on-chain activity, trading value, are all off their all-time highs. And of course, that's not surprising since we saw a 50% discount from the all-time high price. But if you look at those same statistics, if you look at those same statistics cycle over cycle against 2022, the bottom of the last bear market, then the picture inverts. It's really only prices that haven't kept pace. I think it's an accurate picture of what we are truly seeing today. The market is quoting bear market prices on an industry that is twice the size it was at the last cycle's bottom, with deeper liquidity, stronger fundamentals, and Wall Street finally on chain. That foundation won't end this winter, but it determines what grows in the spring. And to be honest, that's something that I really didn't even take into account. But I have been kind of saying that things have changed with the entrance of institutions, with the added liquidity cushion of the ETFs, with the amount of interest around Bitcoin. You can see that Bitcoin has grown in size here. Maybe it hasn't caught enough of the mainstream attention of what Bitcoin is and what it will do, but all the fundamentals are bigger than they were at the 2022 bear market, and we are basically back at the 2021 all-time high. To me, it's starting to make me think, it's like, wow, everyone's thinking that the new all-time high is just going to be like a double from, or maybe I actually, one of my friends was like, dude, we're only going to get to 150K next cycle. I'm like, bro, you're such a bear. Like, that's incredible. Everyone's still talking about diminishing returns. I'm like, I'm perpetually bull-tarded. I was wrong last cycle. I thought we were going to 200K. So I'm not going to give you a price prediction. All I'm saying is I think it's going to go a lot higher than we think it would or should because of the foundation that has been built. Now, to kind of give you another update of where we currently are right now in prices and not really giving you a speculation of where we're going, I saw Alex Thorne post this, of course, of Galaxy Research, which is super interesting. He goes, an enormous amount of old Bitcoin came online and moved on chain in 2024 and 2025, rivaled only by 2017. You can see that here, 2017 high, basically where it peaked. It went down, and you can see 2024, the same amount of Bitcoin coming online. Well, not the same amount, but a lot of Bitcoin came up, kind of came alive, got sent to exchanges 2024 and 2025, basically when we were headed towards 100K. This, quote, great distribution is mostly over, and 2026 is on pace to see less than half the amount of awakened coins as last year. I don't know if you guys are reading what I'm reading, but if less Bitcoin is being sold, and with the Bitwise report essentially saying the demand for Bitcoin has expanded, I don't know, guys, number go up? Maybe number go mega bullish. Now, my favorite thing right now is I'm kind of doubling down on Wyckoff accumulation. So we'll do a little chart boying. Again, here's the current price. Oh, it's going down a little under 65K. Obviously, the 1010 crash here. Wait, 1010 crash here. Wait, this one. Where is the 1010? What's going on here? I'm confusing myself here. I think it's this one. Oh, no, it's up here. All right. Anyways, you can see we finally found a bottom. Now, we had the huge crash in February, basically when the Iran war was announced. Got some squiggly sideways. We finally, it looked like maybe we were going to get out. We hit the 200-day moving average. Then we came back down. It's looking almost like a spring. And this is what I've been looking at recently, is the Wyckoff accumulation. And without, going back and forth and looking at everything, I think we're here at phase C of the Wyckoff accumulation. Obviously, could be wrong. Who knows? But if we are, in fact, here, and we saw the spring happen on June of last month, or maybe even, basically June, I think this is what the price action we're going to be seeing. We're going to see a little bubbly. It's going to be like the, the produce parasite going around. It's going to be a little bubbly. All right, guys. And so if this is where we are, again, as I was making the case on yesterday's show, I'm like, I think the bear's over. Will we know for a fact that the bear's over? No. Like, am I saying that the end of the bear is going to go to 100K overnight? No. What I'm saying is I think we might have seen the bottom. We probably have a couple of pullbacks left in us, but the climb is coming here soon, guys. The climb is on the way. The movie just got started. Definite cup and handle with pronouns, bill horns, and yeah, dude. Win some. I'm sorry, dude. I like chart bowling. Chart bowling's fun. All right. Forgive me. But yes, numbers going to go mega bullish. Last bull cycle was an 8x. If the low was 58K, 8x would be 464. Let's go. I don't know what this comment is about. But anyways, I say all that to say, with the current price action that we're seeing at 65K right now, like, it's starting to feel like the pressure is coming off our shoulders as Bitcoiners. It almost does feel like we can finally breathe. It is starting to come across like, oh, okay, like there is light at the end of the tunnel. I know everyone is still saying like 35K, and I'm like, dude, you guys are lost in the sauce. The 35K is like, what was last cycle? Wasn't last cycle like 15K when we were in a bear market? Yeah, we were at like, when was it? Let me go out to the weekly. You know, 20. Yeah, we were like 50K and like, dude, we're going to 15K. I'm starting to get the same vibes here with 35K. I don't see it happening. Or sorry, 2022. No. My charts are all messed up. Anyways, guys, my guest, Peter Duan, is here. So I'm going to keep it moving. We're going to be talking, as I told you, about Bitcoin Treasury companies and, of course, TradFi embracing Bitcoin. So I'm going to back up the commercials so that we can just have a free-flowing conversation. So I'll be right back in about 2 minutes.
I want to give a shout out to our partner, Ledin. Here's something most Bitcoin holders never figure out until it's too late. You're sitting on wealth you can't touch without selling. Ledin fixes that. Bitcoin-backed loans. You keep your stack, you get cash. And they just introduced their lowest rates ever. No complexity, no fine print. The larger the loan, the lower the rate. These new rates apply to all new loans, refinances, and renewals. You'll see all the rates up front before you apply. The new, lower rates come with Ledin's gold standard protection. Your Bitcoin remains custodied and is never lent out for interest. Perfect 8-year track record of keeping clients' assets safe. Auto top-ups, LTV alerts, and partial repayments to keep you in control. Repay whenever you want with zero penalties or monthly payments. Ledin's perfect $10 billion track record through every market cycle in the last 8 years speaks for itself. Don't choose between a great rate and the safety of your Bitcoin. Get both at Ledin. If you ever thought, what happens to my Bitcoin if something happens to me? Or what happens if I lose my phone? You're not alone. For a lot of people, the biggest barrier to self-custody isn't buying Bitcoin. It's the fear of making a mistake. And that's why I like Bitkey and I recommend it to my friends and family. Bitkey is a Bitcoin wallet built for real life. Not just for day one, but for everything that happens in between. Lost devices, upgrades, accidents, and long-term ownership. There's no seed phrase to write down and worry about losing. And no single point of failure that can lock you out of your Bitcoin forever. What really stands out about Bitkey is the peace of mind. Recovery is built in. Inheritance is built in. It's a complete self-custody system built by the team behind Square and Cash App, designed to make holding your own Bitcoin simpler and safer. Take self-custody of your Bitcoin today using Bitkey. Go to bitkey.world and use promo code SIMPLY for 10% off your new Bitkey. That's bitkey.world, promo code SIMPLY. I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy across 3 continents, HIVE runs dual engines, Bitcoin mining and AI compute. Their AI platform is ranked #1 in the world for network performance, and it's doing something bigger than compute. It's accelerating human discovery, the science, the breakthroughs, pushing humanity further and faster. Listed on the NASDAQ with the ticker HIVE. Catch the latest buzz at HIVE Digital Tech on X or hivedigitaltech.com. You secured your Bitcoin, but did you secure your devices too? They're still broadcasting your location and digital footprint. GPS, Wi-Fi, Bluetooth, cell, 5G, EMF, all of it is leaking. Escape Zone fixes that. Their Faraday bags block every signal your device emits, so you decide when you're detectable, not the grid. Built for Bitcoiners who know sovereignty isn't just your wallet. It's your phone, your hardware wallet, your keys, and your entire digital life. Go to escapezone.com/simply and use code SIMPLY for 10% off. That's escapezone.com/simply, code SIMPLY.
All right, Peter, welcome to the show. Good to have you. First off, you said you can hear me. Can you hear? Let's see if I can hear you.
Can you hear me?
Yes. All right. I got you, man. Okay. See, this is what happens when we do the show live. Sometimes I got to do the live, AV troubleshooting. But anyways, Peter, if the audience isn't that familiar with you, obviously from what we've seen on your Twitter and your story, you've came from the traditional financial world, Cantor Fitzgerald to S&P 500 investor relations, and now hardcore Bitcoiner, and emphasis on the Bitcoin Treasury space right now. So can you give the audience basically just a little short example of what that journey was like for you? Because I think it'll shed light on maybe how the broader world is viewing Bitcoin currently. So how'd you go from TradFi to now just being a full bull Bitcoin, a full bulltard on Bitcoin and, Bitcoin Treasury companies?
Yeah, so thanks for having me. Been in traditional finance for my entire career, 14 years now. And it was very interesting coming from that background because for the first, the first 10, probably 12 years of Bitcoin, I always thought it was a bit of a scam, right? There's not many things within finance, traditional finance, that you see such a parabolic run and then a immediate dump and then doesn't die. So the thing that kind of really was the orange pill moment was when I saw that BlackRock and Fidelity was launching a Bitcoin ETF. And this was only about 2.5 years ago. And so I was like, listen, BlackRock and Fidelity are the #1 and the #3 largest asset managers in the world. Will they ruin their financial reputation by launching a scam ETF? And so the answer is effectively no. And fast forward, BlackRock's IBIT is actually the best performing financial product that BlackRock ever had. And so that was the impetus for me to do my, call it 250 to 500 hours of studying Bitcoin for me to really realize that this thing is here to stay. Now, specifically about Bitcoin Treasury companies that got me excited is the fact that this is the first time in which Bitcoin has escaped, call it the traditional crypto scene, and now moved over to the traditional finance world, where Michael Saylor and what's known as Strategy now has pioneered the Bitcoin Treasury model.
Okay, awesome. I do before we dive a little more into the Bitcoin treasuries at large here, because I know our audience, some of them are hardcore Bitcoin treasury guys. Some of them are like, I do not want your Wall Street shitcoin. So before we get into that, whether they should even have a place on the market or buy their stocks, etc., I do want to unpack just like the initial journey that you went through, because again, the BlackRock ETF went live in 2024. And I'm sure you as an individual are a little more nimble than maybe, some of the bigger TradFi institutions here. But since you came from that world to what we all know in Bitcoin, because most of us just learned about the traditional financial world through Bitcoin, through the lens of Bitcoin, and we really don't understand how things work on Wall Street. We all, watch The Wolf of Wall Street and we think like that's how things work, right? But I think it's a good kind of explanation and summary of what happens at these institutions. And really, I think people forget just how slow those institutions work. So do you think that you are an example of what is happening at these institutions, or do you think you're an exception to what happens at these institutions? Do you see what I'm saying? It's like, are you basically like a generalized example of what we're going to be seeing from Wall Street, et cetera? It's like they take a little time to understand Bitcoin. They obviously move a little slower, but once it clicks, they come in and they're like, wait, this is actually what I always thought it wasn't.
Yeah, that's a great question. And that's a very unique question that I don't hear very often. So I would think that I am still a little bit earlier than what I anticipate a lot of traditional finance people to be in, simply because, let me take a step back. I went to UCLA, but I studied environmental science. So that means I never took a single accounting, finance, or economics class. Yet I've broke into finance after a lot of self-study and hustle, and that's what I think separates me from a lot of traditional finance guys, is that I had to teach myself a lot of things from first principles. Also, you have to understand, at these traditional finance institutions, a lot of what, like the managing directors or the people who are in charge, they're in their, call it mid 40s, 50s, if not 60s, right? And so you have to think of the mindset of those people. Those people have worked really hard for decades, probably 2, 3, 4 decades, to get to where they are, which means that at some point you become institutionalized in the way of how your institution or your industry thinks. Now, the good part is that millennials, I'm a millennial, are now, becoming the managing directors or the people who are becoming in charge. And as the older generation ages out, I believe there's going to be a greater focus towards digital assets, in particular, Bitcoin.
Got it. Okay, that makes a lot of sense to me. Before I get into the treasure, because this is I love this conversation here because I get to unpack your brain again. I learned through I did the same thing that you did. I've learned everything from first principles, and then I found Bitcoin, and then I've had to learn everything else outside of Bitcoin and be like, oh wait, okay, everything doesn't work how it works in Bitcoin. That's interesting. Do you think? Wait, wow, I just blanked on what my question was. I had a good one. I had a good one here. But anyways, all right, whatever. I had a question here that was going to follow along with what you said. Oh yeah, I remember. Again, I've been in Bitcoin since 2017. One of the big cases that I've been making to our audience is that fundamentally, since 2024, when BlackRock got into Bitcoin, that it has changed Bitcoin forever. Like, I don't think that there's any debate at this point, at least in my opinion, that Bitcoin has changed. So now that you're in Bitcoin, obviously you basically said you got in around 2024, but from your vantage point here, do you think that fundamentally Bitcoin has changed and we are going to see Bitcoin kind of maybe act different moving forward from here because of the institutions?
I think you made an observation, correct observation, is that I effectively got in around 2024. And so, that's only about two and a half years. So I don't really know and can empathize with the ethos before then. So I've only kind of knew it since the traditional finance world started, building rails to it. That said, though, there's things that I can anticipate, such as the fact that the volatility profile should go down just due to the law of large numbers. And then if you follow the power law, you also realize that it will asymptotically, decrease on the ARR and volatility profile. But that's not going to be, severely dampened in the next, call it 5 years, but it should trend, towards that, especially if Wall Street gets involved, because Wall Street, while there are, big pools of capital, they do also rebalance quite a bit to take profits. So when you do that, then naturally speaking, the early people, like say for instance in the bear market now, if you're a smart institution, yeah, you'll buy. But then after a certain point, they will take profits earlier than hardcore hodler like you and I.
Got it. Okay. All right. That makes sense to me. Let's talk Bitcoin Treasury companies, because that's been all of the rage for the last year or so. We all saw last year, probably most of the gains happened in the Bitcoin Treasury company, which may have dampened the Bitcoin bull run, but we don't have to get mad at them. Could you make the case for the audience why you think Bitcoin treasuries are important, that they're going to stay, and they are a game changer here? Because I know our audience is usually like, why would I buy this stock when I can just buy Bitcoin? So what is your pro Steelman bull case for the Bitcoin treasury companies?
So first and foremost, I want to clarify that I think everyone should own pure Bitcoin in cold storage, and if you can run a node, great. That said, though, we also have to be cognitive of the fact that not many people are going to spend that 250 hours to 500 plus hours understanding the pure protocol of Bitcoin, of cold storage. I think that's just impractical. About a week ago, I found Brandon's, study of the various personality types of Bitcoiners compared to that of the general population. Bitcoiners obviously are much more logical. They're willing to, come from a first principles standpoint, but then also by definition, they're also much more rare as a population group. So we have to meet people where they are. That's what I'm trying to say. And so another point that I want to add is that Hal Finney, rest in peace, I've seen screenshots of him discussing about Bitcoin, and in particular about Bitcoin banks. Because he also realizes that eventually there needs to be rails created to onboard the next wave of or the next 100 million user base. And I just don't think that it is very practical or realistic for people to think to study Bitcoin and do all that things that I mentioned before. So that's where Bitcoin Treasury companies can and will play a role, right? So I don't know how well versed your audience is in the history of how MSTR got started with Bitcoin, with Bitcoin Treasury as a strategy, but let me just briefly summarize. So this is in the depth of COVID when Saylor was quite frustrated because he was sitting on $500 million worth of cash. He realizes that the Fed is going to print a bunch of money to stuff the economy to survive COVID. And he was racking his brain because he's been keeping, at that time, the company was called MicroStrategy alive for a couple of decades. But he could never beat the giants like Microsoft, which is kind of the industry that he was playing in. So he was really close to throwing the towel, but he remembered his friend Eric Weiss telling him about Bitcoin. And so he went down that rabbit hole and he realized that, hey, this is actually a very good defensive strategy to own a bunch of Bitcoin to ride out the potential money printer that was going to come. Now, so he bought, call it that first $500 million worth of Bitcoin. But then he realized a very interesting phenomenon, which is at that point, Bitcoin ETFs did not come out. And so it was actually a good proxy for people who wanted to get Bitcoin exposure in their brokerage to buy MSTR. Because again, the ETFs were not live. And one interesting phenomenon that he discovered was the fact that his stock was trading above the value of what was of the Bitcoin that was on his balance sheet. This is what's commonly known as MNAV, or multiple to net asset value. So for simple math, let's just say he had $500 million worth of Bitcoin, but his stock was trading at $1 billion. So roughly speaking, his MNAV was 2, right? Assuming you don't apply any value to a software business because it's really not a profitable business. So one interesting mechanism for that is that he realized, there is a mechanism in Wall Street where you can effectively sell your stock at that premium and to buy Bitcoin. And so using that simple math I said, with $1 billion worth of market cap of your company sitting on $500 million of Bitcoin, you sell your shares at a premium, you effectively get to buy Bitcoin at a 50% discount. Said another way is, if your MNAV was at 4, you get to effectively buy Bitcoin at a 75% discount. So that was what he was doing initially. And then he was trying to figure out, okay, this is very interesting, but is there other ways to tap into huge pools of capital that has historically been locked out of Bitcoin? So at first he looked into convertible bonds, which is very interesting because convertible bonds, as you can hear in the name, is first bonds, but after a certain stock price, you get to convert these bonds into equity. And that was very interesting for the marketplace because they observed that he was able to raise billions of dollars worth of convertible bonds at very low interest rates, sometimes at like 0% interest rates. I think on his blended basis, it was below 3%. But the reason why he navigated away from convertible bonds is that he realized that people who were buying these convertible bonds were not long-term investors. Instead, there were hedge funds who were just trying to use the volatility profile of these instruments and trading them, effectively suppressing the common shareholders' volatility so that you cannot do the accretive dilution game that I just mentioned. And so he eventually moved away from convertible bonds into what's known as perpetual preferreds. You can think of perpetual preferreds, if you look at a traditional capital stack, the lowest on the capital stack is the commons, then it would be the preferreds, and then it would be the traditional debt. Okay, so perpetual preferreds, if you listen to the words, it's perpetual in the fact that it is in perpetuity, which means that this debt does not come due. Now, there's downsides to that in the fact that these perpetual preferreds actually have a pretty decently high cost of capital. So if you were to look at, I think they have 5 different preferreds out now. They haven't been trading well lately, but they're double digits in effective yield. So sorry for all that long ramble, but that's effectively the evolution of MicroStrategy. Strategy, which has been the pioneer in this strategy for the last 5 or 6 years.
Yeah, without a doubt. And I think even though a lot of people maybe aren't the biggest fans of Saylor right now, he's been in a lot of controversies in the last couple of weeks. I think a lot of people really underestimate just how much demand these Bitcoin Treasury, these pure Bitcoin Treasury plays have, added to Bitcoin. And further, like you were explaining, how they have broadened the liquidity pools that can enter into Bitcoin. And so with that in mind, do you think that we are going to see a sustained demand, not just from, Strive or Strategy, but do you think that amount of capital that wants to buy these stocks is going to continue to go on into the future, or was this just a flash in the pan moment?
It's definitely, I don't think, a flash in the pan moment, because a lot of people don't understand kind of the way these are structured, where they think, oh, in a bear market, just because Saylor's selling some Bitcoin right now, that they're going to get margin called. No, this is like what they've created is, if they call it amplification, which is just means like you can just think of leverage, right? So in a bull market, just the way they're structured, they should technically outperform Bitcoin itself, but in a bear market, they should underperform Bitcoin. So that's exactly what's been happening now. They're just simply underperforming Bitcoin, but just the mechanisms that that they're created through these financial products should technically drive pretty significant demand across, again, these previously untapped pools of capital. Because if you think about it, looking at the preferreds right now, they're yielding anywhere between, call it 11 to 14%. And so if you're in a fixed income investor and you can, you understand Bitcoin, and you can underwrite the risk profiles of these preferreds, which, by the way, they're extremely transparent. On Strategy's website, these metrics literally update every 15 seconds. So if you can understand these things and understand, like, oh my gosh, like this thing is like quite anti-fragile so long as Bitcoin itself performs, then done right, you can actually severely outperform your peers. And at the end of the day, if you're an active fund manager, that's your entire job, is to generate alpha. And so I'm not saying that these fund managers ought to buy 100% of their portfolio into these instruments, but rather, like, if they're optimistic and understand these mechanisms well, they can do pretty well by buying where everybody else is selling now. And as a result of that, they're going to drive quite a bit of demand for these preferreds, which in return, they're going to drive the performance of the commons. I just want to add that why is it so important that MSTR is focusing on the performance of the preferreds over the commons? Well, so let's just say, like, right now, the main product is Stretch, STRC. STRC has at par value of 100, the effective yield is 12%, which means paid out 1% each month. Okay. Now, they underwrite that Bitcoin should outperform 12% every year. So they said, hey, we will take the risk of paying that first 12%, but every percent residual above that will flow to the common shareholders. And so that's why they're trying to prop up as many of these preferreds back to par value, is because they underwrite Bitcoin to be greater than 12%. And if you believe that's a thesis as a Bitcoiner, then you should also want to invest in both the commons and the preferreds. Sorry.
Got it.
Did you get lost?
Got it. So going on the record, STRC will get back to $100 par.
Well, that's the main goal. Like that's the stated goal.
Yeah. He just tweeted, what was it I think it was this morning or maybe last night. He's like, look, our main goal is to make sure that STRC gets back to par. And everyone's obviously making a bunch of noise right now because it's Bitcoin Twitter. I do want to kind of shift the conversation a little bit. Obviously, you come from the TradFi world. Now you're in the Bitcoin world. You are obviously adamant for Bitcoin for corporations or corporations adopting Bitcoin. So let's say you were talking to someone from a TradFi institution. What would be your pitch for Bitcoin, or maybe even MSTR, or adding Bitcoin to their balance sheet? Like, if you're in those rooms and you're having these conversations, what do you tell them about Bitcoin? Like, how do you get them to understand Bitcoin? Because that's one of the things I've been talking about on the show is like, look, we all know the memes and the narratives that got us into Bitcoin. But as we move on, like you said, if you're talking to someone that's a head manager at whatever firm on Wall Street, you're not going to be just saying like 21 million hard cap, like have fun staying poor, like it's got to be a different pitch. So say I am that guy, the young asset manager at, I don't know what firm on Wall Street, but what would be your pitch to them on why they need to understand Bitcoin and potentially add Bitcoin to their balance sheet?
That's another good question. First and foremost, I would not talk about anything other than Bitcoin. So I would not be talking about MSTR or the preferred, simply because that is another layer of sophistication above that. And I think 99% of major financial institutions barely wrap their head around Bitcoin itself. But I would actually, again, try to meet people where they are, which is like, I can anticipate that most of these institutional investors understand the impact of AI. And I can simply just start there. I said, hey, right now, AI is a very small sliver of the economy. But in the future, do you think AI and also robotics will be a bigger percentage of the overall economy? And I suspect 99% of these fund managers will say yes. And so I said, okay, let's put on the hat of you being an AI. What do you think you'll value? And so they'll probably come to the conclusion that they'll value two things. One is speed of transaction through probably stablecoins or any of these other crypto rails that allow transactions to happen. But on the value side, they would probably value something like Bitcoin, which is the first energy-backed currency. And so in the world where compute is the rarest currency, I think from an AI perspective, Bitcoin will be quite interesting for them. And also, if they are historians of finance, they should understand the cycles of reserve currencies. And you can just pull up a chart and show that, whenever you're the largest economy in the world, they're generally speaking, their currency is the biggest as a percentage of the overall global reserve basket. But then you can also see that America's dollar as a percent of the global currency is going down while China's is going up. And then you can overlay that with gold doing quite well. But then from there, I would talk about what's the difference between gold versus Bitcoin. And so as you and I know, the divisibility factor, the verifiability factor, the transportation factor, so on and so forth. And then the 21 million hard cap. That's the mechanisms that allow Bitcoin to be a superior form of gold. Now, at the end of the day, I want to caveat that saying, hey, just because I'm a Bitcoin bull and I like to, keep a majority of my assets or net worth in Bitcoin and Bitcoin derivatives, doesn't mean that you, Mr. Institutional Investor, ought to. And then I can show them that even adding 1% to 2% of Bitcoin adds a diversification factor to your portfolio, which means on a risk-adjusted basis, you will outperform. That should solidify another conversation.
Yeah, it is. I think Bitwise has been beating this drum for a while. It's like literally just adding 1% to a 60-40 portfolio or 1% of Bitcoin to a 60/40 portfolio just like completely outperforms everything else on a risk adjusted basis. Anyways,
Yes.
Peter, this is a news show. After all, we cover the daily news here. So from your perspective, coming more from a traditional finance background, now super bullish on Bitcoin, what do you think is one under the radar narrative or development that you've seen this year that will drive more corporate and institutional adoption of Bitcoin? Like what's one of the catalysts that you think everyone out there in their big ivory towers are looking at Bitcoin and being like, oh, okay, like we have to get into this thing now?
Yeah, you're asking some really smart questions that I don't.
Don't tell. I'm dumb. I'm dumb. Don't let them know.
No, I definitely don't think so. Actually, I actually think a lot of people are poo-pooing Bitcoin Treasury companies and its products, but I think 80% of the underperformance or the bears are going to be silenced just simply due to the performance of Bitcoin itself. Simply because Bitcoin Treasury companies and derivatives, I'd say that like 80% of it, is dependent upon the Bitcoin price. So as Bitcoin improves, these other instruments will improve, and then they'll quickly realize, oh, A, these products are here to stay, and B, these products actually drive a huge amount of demand that nobody even realizes. And so I think nothing like there's a phrase like never waste a crisis, right? And so I think but when we recover out of this bear market and these products survive, then this is actually going to be the best marketing tool for going in the future. So I'm not saying that Bitcoin Treasury companies are the best thing since sliced bread, but I think that what I am saying is that they are going to be a significant driver of buying up supply going forward.
Okay, yeah, that makes sense to me. I do. Hold on. I wanna end this and kind of put a bow tie on all of this here. So let me think about this. Oh, actually, before I do that, when you're talking to, or like when you talk about Bitcoin for corporations and how corporations should think about Bitcoin, do you think that and I'm going to use strategy as an example here, and maybe it's not the nicest way to put it, but like, do you think that there is room for more pure Bitcoin treasury plays like strategy, or what does like a corporation adding Bitcoin mean to you? Is it just adding Bitcoin to its balance sheet like SpaceX, or is this like follow strategy's lead here?
Another great question. So I think I'm actually probably in the minority camp that I think there's not going to be so many of these Bitcoin Treasury pure plays where they will be issuing things like what they call digital credit. That being said, I do think that if we are pure Bitcoiners and we believe in the merits of Bitcoin, and you are a business owner, you should own some Bitcoin on your balance sheet, right? At the end of the day, like AI and robotics is going to really drive up the competition. And so, this is why I'm a little bit scared of AI, but I think Bitcoin is kind of like that life vest, is that if you and I are in the same line of business, but you use AI or you use more AI more effectively than I do, you absolutely crush me, right? But take this to another degree, and this effectively like that competitive landscape becomes very, very small and top heavy. And so the counterweight to that is because of the hard 21 million cap supply of Bitcoin, is that if you can own some Bitcoin and weather the storm, then especially in a bull market, then you'll be able to survive it better. And then maybe you'll be able to acquire some of your competitors simply because you have this Bitcoin as a life vest.
Yeah, that makes sense to me. I do want your I was going to say your expertise, your background, but we are going to speculate a little here. So BlackRock launched 2024 their Bitcoin ETFs. We saw last year some banks kind of come on board. This year, almost every huge bank has essentially either launched a Bitcoin product or talked about launching a Bitcoin product. So what do you think the next, I don't know, 2 to 5 to 10 years looks like? In your mind, does this look like every big institution around the world that has to do with finance is embracing Bitcoin? Like, how long do you think this is going to work out where we see the institutions go from hating Bitcoin to being full bulltards?
So full bull charge, probably not. That's just due to like a risk management profile thing. That said, though, they are getting more and more wise to it. I think one of the poster childs of traditional finance who hates Bitcoin is Jamie Dimon.
Yeah.
Yet while he's publicly fudding Bitcoin, his bank is actually working to create more Bitcoin-backed products and other crypto-related products that we won't talk about. So at the end of the day, superior technology is going to win out. And just simply due to the game theory aspect of Bitcoin, if you don't play, then you're going to lose.
100%. 100%. I couldn't agree more with that. All right, Peter, I like to give our guests the final floor to get the last message across to the audience. So whatever you want to talk about, whether it's why, Bitcoin treasuries matter, why they should be buying Bitcoin, or just general life and motivational advice at the bottom of a bear market. Final 2 minutes. It could be more if you want, but what's the final message you want to give to the audience here?
So one is more specific and one is more general. I think I'll start with the more specific one first. So as we alluded to at the beginning of this, is that we need to understand that Bitcoiners by nature are the minority. And therefore, if we're trying to persuade others to join this orange pill boat, we need to be better at communicating the ideas, right? And we need to be, I guess both my comments tie in with each other, is that in order to persuade, it's not so much as about throwing facts and analytics at the other person, but rather trying to tap into the human side of things and the EQ side of things to communicate and create a bridge across each other rather than fling, poop at each other, right? I think this, BIP 110 thing, the knots versus core thing, has been illuminating in the regards that there's really good-hearted people, very intelligent people on both sides, but they're yelling past each other. And I think if we're trying to really upgrade the world by upgrading the money, then we need to figure out a better way to communicate with each other without, these ad hominem attacks.
Yeah, I couldn't agree more. I've been saying that for like over a year. And then actually in the last couple of weeks, I've been, I wouldn't necessarily say just telling the audience. I've been thinking about it live on air. I'm like, I know for a fact that I need to get better at getting people excited about Bitcoin like it did for me. And it's like, what is that tap in where we can make the next, 100 million plus people get excited about Bitcoin and obsessed with Bitcoin? And I boiled it down to the same thing. I'm like, we just need to get our messaging across better. Like, telling people about the Fed and, your purchasing power has been destroyed since 1913 or privacy, et cetera. It's like, that worked on us. It's not going to work on the next people. We really have to sit back and reevaluate how we talk about Bitcoin to, I guess for lack of a better term, get all the normies on here. And I know some of us in the chat, they just don't even care. But since it's our job here at Simply Bitcoin to try to get every different voice to talk about Bitcoin, maybe, one way resonates with you and the other one doesn't. So Peter, I would totally agree with that. Before we sign off though, do you want to push the audience anywhere? You want them to go to your socials or website? Like where can people get in touch with you and what do you want people to check out?
Yeah, I'm most active on Twitter. You'll see my Twitter handle, BTCBULLRIDER, down there. I mostly talk about Bitcoin Treasury companies simply because that's kind of my little niche in the space. But I like to talk about Bitcoin in general and then some AI stuff as well. So feel free to follow me or just DM me. I'm pretty wide open.
Let's go. All right. For the audio listeners, guys, the Twitter is BTCBULLRIDER. So go check them out. Peter, thank you so much for coming on. It is like we talk about the news because it's Bitcoin Treasury companies. We are like hardcore, just like buy Bitcoin in self-custody. So it's good to get the opposite view here of like, look, guys, these Bitcoin Treasury companies aren't going away. And they might, in fact, bring more demand to Bitcoin. So,
well, so I just want to caveat one thing. It's not opposites. I definitely think first and foremost, buy Bitcoin.
I meant opposites because we're like hardcore about it. We're like, why would you buy this stock? Just like buy Bitcoin. It makes no sense to me. But yeah, no, we're all in alignment here. We want you guys to buy Bitcoin. Just buy Bitcoin, take it into self-custody. But it is interesting to hear that, look, there's a place for this. And obviously the market has reacted in a way where there's huge demand for whether it's what Strive's working on, what Strategy's working on, et cetera, et cetera. It's all pointing towards the same end, which everyone's going to be a Bitcoiner one day. Maybe not in our lifetimes, but everyone will either interact or hold Bitcoin in the coming future. So anyways, Peter, thank you so much, man. Really appreciate it. Looks like the chat liked what you were saying, even though they're hardcore Bitcoiners. They're like, this was interesting. So appreciate you coming on, man.
Thanks for having me.
All right, guys, let me wrap up today's show. Guys, you already know the deal. We go live 12:40 p.m. every single day, Monday through Friday. Oh, wait, actually, before I move on, guys, and mainly guys and some gals, we're going to be at Mining Disrupt next week. There is 5 days left until the Mining Disrupt conference. If you're interested in Bitcoin mining, if you just want to go, I'm already guessing. I know last year there was a what do you call it? A keynote there where it was like a debate about BIP1, or I think at the time it was core and not. I can only imagine that this year is going to get even more spicy. I'm sure there'll be a lot of pro BIP 110 stuff, anti BIP 110 stuff. So if you want to go and actually talk to the miners about what they think about this BIP 110 activation coming up, this is the place to be. Go talk to all of the miners, see the economics of mining, whether you should get into it, whether you can still make some money. Anyways, it is in Miami, July 21st. Through the 23rd. It is happening next week, guys. So we will be there. I think we're going to do live stream news desk from the floor. So we will be streaming it if you don't want to spend your sats at the bottom of the bear market, but come hang out with the boys in Miami at Mining Disrupt. Anyways, guys, peace out. I'll see you tomorrow. Have a good rest of your day. As always, stack some sats, take it in the cold storage. I would say work out right now after the show, but I'm going to go watch the Argentina game after this show. So we're watching the World Cup tonight, guys. We're watching, or I guess today, we're watching the World Cup right now. I'll see you tomorrow. Have a good rest of your day. Until then, it's your boy Opti, and I'm out.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.